Welcome to our eSignal weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. Before we get to the charts, just want to touch on this quote very quickly. Warren Buffett summarizing Berkshire Hathaway's investment philosophy, which is exactly how we view markets. Our approach is very much from profiting from lack of change rather than from change. In other words, we're just looking to go along with whichever way the market's moving right now. Speaking of which, here's the Australian US dollar. We're watching the Aussie short term because you could see that you've taken out a relatively short term trend line here. The market potentially making a base here when we look at our ratio. Now, it's not so significant that you have the 5 and the 10 are rolling up here as much as the 5 and the 10 are rolling up, and you still had that grand pattern holding. So given that long-term pattern holding, you have to keep an eye on this. We're not looking by any means for a sea change move here. However, if I jump out to a weekly chart, anytime you do have a shorter term trend shift along the lines that we're seeing now, in line with that long-term grand pattern, you could crank out a secondary rally along the lines of these ones that we saw last year. So to put that in perspective, if you get one along those lines in the Aussie back down to the daily chart, that could be a significant move. So that's why we're keeping an eye on this guy short term for a breach of that 77 level. Keep in mind the Aussie dollar is not in the dollar index itself, so you can continue to see a strong dollar, yet you could have a strong Aussie at the same time. Next market, the dollar Swiss. The dollar Swiss, you may have a little bit of room short term on the downside. We would see this support level here in the 95 handle here. Right around 95, even a potential buying opportunity. When you pan out to the long-term view here, the monthly chart, we see nothing but upside on there, so we're certainly not going to change anything there. Swiss franc, dollar Swiss, continue to buy dips, ton of upside. Dollar index, same story. To really get scale on this guy, yeah, you were all the way up at 120 back at the peak of the last cycle high there, but if you pan out here, you don't see the prices on this chart. This market had actually gotten as high as 160 back in 1984. So again, a market with just what we see as a tremendous amount of room on the upside here. The story in the U.S. right now is going to be retail sales. If the U.S. can match or even go beyond the retail numbers that they put up in the second quarter last year, in other words, the spring, you get a spring boom in the U.S. economy, and we think that's going to be big again. We think it's going to be bigger than last year. If you do get that, there'll be a lot more room on the upside for this market, so everyone's keeping an eye on that. Next market, the euro. The euro, we think there's a ton of room on the downside. I know I'm a broken record in saying that. What Goldman Sachs came out and said that their 2016 or 2017 target for the euro is now 80. Right? They say it's going to go to par very quickly. We've been saying that all along too. 80, that's a tremendous amount of downside. You're at 108 right now, so that's a full that's a full 28 handles lower they're calling for. So hey, we'd have to agree with that. You're in a downtrend. Of course, they haven't totally repealed the law of gravity, so you always have to watch these guys from a shorter term perspective too. You don't want to get caught there, but we've been pretty solidly short this guy for a long time, vis-a-vis long the dollar, so we're not so worried about short covering rallies here. We would see them as an opportunity to get short again. A lot of room on the downside. How can you disagree with that call, with Goldman's call? Par short term and then 80 longer term. Totally in agreement with that. I think there's a ton of room on the downside for the euro. Next market, gold. I think you have to view gold longer term too. Here's the monthly on the gold, and look at that. It's just kind of hanging on by its fingernails. We think you take out this level, and we think gold drops a long ways, and we think you're not going to be, people aren't going to be talking about gold a whole lot once this support level goes in here. We think that'll be the end of the gold for a while. Anyway, when we think 800 or so would be really one of your first stops down in that market. Now, of course, not a whole lot of traders look at these markets from that long-term monthly perspective. A lot of players look at it from the perspective of a daily, and you're looking at the daily right here. So yes, gold is on support. Gold found support again at the 2014 lows. So you're looking at the potential for a double bottom. Yes, we see that. Yes, it's short term, however, and we feel that you look at the big picture here. Again, I apologize for being a broken record, but that's a lower high, lower high, lower high. Succession of lower highs, that spells bear market. We think long term there's going to be a lot more downside to this guy. Last market we're going to cover, the 10-year note. 10-year notes, the U.S. Treasuries, the government 10-year note. We think this market's at definitely at a crossroads here. Very fascinating trade setting up here. I want to show it to you on the monthly first. The long term, it's been nothing but a bull market. This market, as U.S. interest rates go lower and lower and lower, what we have here is essentially a longer term lower high, right? So you have lower high, lower high. So now we're finally seeing a lower high. And when you see a lower high, that potentially the reversal of a bull market. This is a massive bull market that we see potentially reversing here in the 10-year. So long term, you have the lower high. This is a monthly chart. Now I'm going to drop down to a daily chart, and you're going to see that self-similar pattern here. You have a lower high also on the daily. So very significant level in here. We're going to watch this closely for sell signals. I think this could be one of the better signals that you'll get in these markets, where you're potentially in a position to pick a major top in a market. So we think if you do get the sell signal up here, if you get a reversal in momentum, you get a change in direction, everything starts to roll lower in this market, that there could be a ton of room on the downside. And we think that event will dovetail nicely with the U.S. economy really shifting into high gear and doing exactly what the Fed wants to do. The Fed wants to raise interest rates. They're data dependent right now. So what that means is if you get bullish data, if you get strong retail growth, which we see just around the corner, then the Fed will definitely raise interest rates, and we'll see this market, this great bull market, come to an end in earnest. So we think there's a lot of downside in the 10-year notes, and we think that will just continue to facilitate a stronger dollar. And again, back to Warren Buffett's quote, we're just going to continue to take advantage of what's going on out there, and basically a continuation of that. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you again next week.